Well, as Philip Lasker just explained, not all business is opposed to the carbon tax. The public face of Businesses for a Clean Economy is the Chief Executive of the Investor Group on Climate Change, Fabian, and I spoke with him earlier this evening. Nathan, nearly 300 companies have signed your statement backing the carbon tax. Why today and not, say, a year ago?
Well, actually, these companies have been saying for many years that they support a carbon price in some form. And in fact, most of these companies said only a year ago that they supported it then. So I think these companies have been pretty consistent in their message of support around carbon pricing.
Despite the fact that those 300 companies have come out and supported the tax, it seems that the business community is still quite divided. For example, we've had the manufacturing industry in particular speaking out against the tax today. The head of Manufacturing Australia, Dick Warburton, said the timing of the introduction of the tax was significantly out of step with the rest of the world. And he then went on to say that the 1st of July introduction will deliver little benefit, if any, to the global environment, but it will be a significant detriment to the Australian economy through reduced competitiveness of Australian business. Why do you disagree with that?
Well, for a number of reasons. The first is that if you accept that emissions need to be reduced, then there is an obligation to put in a sensible policy to do so. We live in a market-based economy, and so a market-based policy makes the most sense. That means a carbon price. And for at least the 300 businesses that signed our statement today, they believe that a carbon price is the right way to go as well. In terms of progress in the rest of the world, there are now 50 carbon pricing schemes of some form at national or subnational level around the world. Now, if now is not the right time, we're going to miss the window pretty quickly. It's important that Australia, as an emissions-intensive economy, starts to transition. So we think now is the right time.
Is $23 a tonne too high as a starting point when you look at, say, Europe, where carbon trading permits are trading for about $10 a tonne?
Some businesses would say it is too high. I accept that. There are others that would say it's too low because they would like to see a speedier transition. It's true that the Clean Development Mechanism price is very low at the moment and is likely to stay low for a number of years. So it's not an unreasonable perspective of businesses who would like to import permits that they can see a lower cost way to do it. But there is one very important mitigating factor here, and that is that for companies that are trade exposed, there is significant transitional assistance available, either 66 or 94.5%, and really that covers most of the cost obligation in the early years when these international permits are low. So we just need to be mindful of the facts when we're thinking about the competitiveness questions.
Well, just on that transitional assistance issue, is the reality not that the government had to give out so much assistance, particularly to the big polluters, that energy investing decisions aren't going to be affected, at least for the first few years?
Well, there's actually a competitiveness question for some of those sectors, so the trade-exposed sectors, and so assistance for those sectors was appropriate. For the domestic energy sector, I think that we are going to see investment in renewables, driven mainly by the RET. But what we are seeing is that the investment community and large companies, AGL for example, but also others, are planning and building pipelines for renewable energy. And that's exactly what a long-term policy like a carbon price is designed to do. We shouldn't expect all the capital to be reallocated in the first year. This is a multi-decade change we're going to go through.
Well, just on investing, and when you look at the broader investing community, are you aware that the carbon tax is having any negative impact on investment flows into Australia?
No, we're not aware of that. To our knowledge, there's absolutely no risk premium on Australia because of the carbon price. And in fact, if we talk to our international peers, and I'm talking about the IGCC perspective here, the investor group, our North American and European investor cousins are very comfortable with a sensible, transparent carbon pricing framework and are supportive of that, and in fact gives them some confidence in the domestic regulatory environment. It doesn't subtract from it.
Your statement today calls for stable long-term policies to give clear signals to investors, yet we have the opposition who, by any reading of opinion polls, will almost certainly win next year's election, saying that the first thing they're going to do in government is repeal the carbon tax. Does that mean that there won't be certainty for investing in Australia at least until the next election?
It means that some of the bigger bets in the energy sector are being put on hold. There is uncertainty out there at the moment. We've just got to call it what it is. But that doesn't mean that companies and investors wouldn't prefer a certain and stable regulatory environment. Investors always prefer that, and that's the case here.
Just finally then, is the real message behind your statement today that big business in particular is just going to get on with moving to a clean energy world under pressure from investors and customers, regardless of what governments do?
Well, not entirely. The policy matters. The policy framework matters so that investors can earn financial returns. We shouldn't forget that. But now that there is some policy change underway, many of the companies and the ones who have signed this statement are going to do their best to get on with it. Now, with a short-term fixed price, that means that a range of energy efficiency investments are going to get away regardless. Some new markets are going to open up regardless, like biofuels, for example, or new energy technology. And so the market forces, combined with some policy change, are going to change company practices and start to redirect investment. The thing that we're not going to see is a really rapid build-out of those new areas because there is still some uncertainty in the short term.
Well, Nathan, Fabian, some uncertainty, but it also sounds like some very interesting times ahead. Thank you very much for your thoughts tonight.
My pleasure.